Good morning and welcome to today's Join the Dots. Now, we are at Tuesday morning here, and it's quite incredible what's happened just on Monday, isn't it, into Tuesday. And we've seen gold go through the 4-1, and we've now seen silver through the 52, in fact 53 at one point overnight. So incredible things happening. Let's just go back to why, because it's so fits in with all my joining of all the dots that I've given you on macro, micro, everything. The dots are joining. They really are. Now, as I gave you yesterday, and I want to repeat these numbers because some people don't actually get these numbers to their whole context. Okay, so our two shares, or my two shares, Agnico Eagle, up 43% since I started this service in 3 months. Annualize that, 43% in a quarter. That's 180% in a year. 180, not 1.8, not 18 even. Can you imagine if your bank said, here's 18% for a deposit? You'd bite their arm off. We made 180% annualized return on AEM. And we've done the same on PAAS, 41% in 3 months. Okay, so it's not an illusion. It's not me trying to sound clever on a video. It's fact. And it's turning into more and more and more fact, because as we proceed along the journey, more and more and more things that I started to talk to you about 3 months ago are showing themselves, because they're true. The truth will always come out. It will always come out, okay? So I'm going to give you 4 pieces today. You don't have to read them all or watch them all, but you have to think about them all. The first one, and I've listened to 2 minutes, that's all I needed to listen to. In my state of mind, after all the research I put in, I can listen to the first 2 minutes of an article and generally catch the whole context. Okay, and this was a piece which I link, okay. Who does it come from? I don't know. It looks like Michelle McCory, but I don't think it is. Anyway, a trillion AI market bubble. Now, we've heard about this loads of times, haven't we? So I'm not going to go into that too deeply. The key, though, is the first opening sentences. The IMF are protecting Powell. Well, of course they are. He's their stooge. He's part of the system, isn't he? They don't want Trump to win. They don't want freedom to win. They want to control everything. Okay? And what they're doing is they're, again, the fear card, just like the virus, just like ESG, just like vaccine, just like climate change, just like everything, play the fear card. Put the fear into the public. So what do they say? They say that if Powell was replaced, this is what they're saying behind the words, if Powell is replaced, there could be a massive repricing of the dollar. Okay, so you tell me what it's going to reprice against. The euro? With Germany and France in chaos, with a war? No. The pound? The yen? The yuan? No. So the only thing that the dollar can reprice against is gold and silver. And that's what we're seeing. So in the first 2 minutes of that piece, I've got it. It's just so simple, okay? It can only reprice against gold and silver, possibly the Swiss franc, but the Swiss are incredibly clever and they're incredibly gifted people, and they will move very rapidly. They will put -5, they'll put -10 on their Swiss francs if they have to hold it at a certain level, and they will, because they protect their industries brilliantly. Remember, the Swiss have got better terms from the EU than Britain had for being in there 20 odd years and then coming out. The Swiss have had better terms all the time because they're brilliant negotiators. Okay, they're brilliant negotiators. They're very clever people. Then we go on to a second piece. Just a minute on this. Mario, Manico 64. This is a really, really important piece. And if you can, take the time and listen to it and watch it. It's about GATA, which is the Gold Antitrust Association, something like that. And basically, this is a group of people who formed a sort of association many years ago to fight what was clearly obvious, the control and manipulation of the gold market. And a man was particularly responsible for that, David Jansen. And Mario kindly linked 7 past videos of David Jansen talking about GATA and gold. It's really interesting to get to know it. If you're serious about your money, If you're serious about why you're holding gold or why you might want to buy gold, okay, this is something you can watch and get an awful lot out of. And you're getting it given to you by me, by Mario, by David. You don't have to search it on the internet. You don't have to go into AI. You can just literally watch these videos and get almost the whole picture. So that's Manico64. I'll link it. Greg, I can't link this because obviously you have to be a subscriber. Those of you who've joined, and I think there's 25, according to Greg saying to me that he's had 25 introductions, okay? Economic suicide to prop up the stock market. Now, this is one of Trump's biggest weaknesses, all right? He's got a lot. Every politician's got a lot of weaknesses. That's why you should never be black or white. You shouldn't be Marmite, love them or hate them. You should understand they've all got weaknesses, they've all got strengths. Well, some of them have got strengths. I don't think Biden had any, couldn't even walk. So they are committing economic suicide to prop up the stock market. Now, you can only prop up a stock market for weeks, months, that's it. You can't even do a year. You can't. Because at the end of the day, as I've said to you from my first words on this show, the truth will come through. And so if you're trying to prop up a lie, i.e. the stock market being at its level that it was, 6.9, then eventually it just, no, the truth comes out and everything reprices based on the truth, not on the illusion. But they're going to take money off the poor and more money off anyone who goes into the stock market. It's their way out. Remember, they've got to sell to someone. They have to sell to someone, and you're their way out if you buy the stock market. Just think about that. I'm going to tell you, we've talked about private credit, haven't we? And we've talked about private equity. And I'm going to, the fourth article I'm going to link is from Neil McEvoy Ward. Now, Neil McEvoy Ward is a very quiet, discreet, but very good presenter of facts from a UK perspective, but not from a macroeconomist. He hasn't got that training. What he has got is a very simple and clever perception of what is happening, okay? And this, it's a gentle presentation, but the facts are startling if you watch it. They're startling. So I will link it for you. One of the key features he picks on is that the local government authority pension fund in the UK, it doesn't sound a lot of money in the US terms, but it is a lot of money. They have invested 16 billion of pension fund monies into private credit. And they've just topped it up with another 8. So they're now 24 billion, despite Tricolour, despite First Brands, despite the fact that it's what I call bleeding obvious that the whole thing's a scam and will run out of liquidity. Even if it's not a scam, it is, but even if it wasn't, the perception of the market now is it is a scam and therefore liquidity will disappear. So who's putting in the liquidity to replace the liquidity that's getting out? Local government pension funds. There they go again. Take from the ordinary person, give it to the elite. The elite get out, the ordinary person comes in. He loses the local government pension fund. How many people does that affect? How many lives does that ruin? This is what desperate people do in desperate times when they have the power to do things that no authorities, no regulatory body, no regulators should allow in the first place. They should not be investing in private credit and private equity, but they are. They've been sold the dream, or they're part of a plan. Who knows nowadays? Then I'm going to come on to Mike Maloney. Now, this is the big one, okay? I don't know how much time we have left, but we'll find out, because I'll be told. Mike Maloney has got a tremendous piece here, and I will link it. I'm just going to find it for you because and all he does is he asks some very sensible questions here. Bubble alert, dire warning from analysts. Well, we know there's loads of analysts out there now that can see the truth. They could see it in 08, they could see it in 11, they could see it in 2000, they could see it in 92. It's not that difficult, you just have to look. But too many people are too busy to look. And they trust other people who are still too busy to look. Because your general financial advisor, what's he doing? Is he looking at the macro situation 10 hours a day like me? 8 hours a day? No, he's not. No, he's meeting targets. That's what he's doing. He's meeting targets. And that means selling product to you. So this bubble alert comes from Mike Maloney. It's a very good piece. Searches for help with mortgages, okay, are now more searched than 2008. All right. Give back car searches now all-time highs. Building permits have rolled over always and every time, the sign of a recession. Look at the charts that Mike presents. Every time the building permits roll over, a recession follows. It's not rocket science, it's just economic logic. 2 + 2, 4, not 5, which the press tell you. Okay, CAS freight index is falling. And I will tell you, watch the shares of FedEx and UPS, because once the economy starts to slow, the movement of goods slows, therefore their revenues slow, therefore they have to give a profit warning, therefore you see it before the market. If you've got your eyes open, if you're bothered to look, if you want to see the truth. If you don't, you'll watch the telly and it'll all happen around you. Okay, late rent payments skyrocketing. Now we know they've got a commercial real estate crisis. We know that from COVID. Well, I mean, they had to go work from home. Where's your commercial real estate? Where's your tenants? They're out of here, mate. Okay. Used cars in trouble. We know that from Tricolor, we know it from First Brands, and we know it from the other company that collapsed. Can't remember the name. S&P 500 versus job openings. It's a graph, and it's a beautiful correlation. You can see the correlation is absolutely 100% until the last few years. And this is the key to me. It's the last few years. It's not just last night. It's not just last month. This is the last few years, and no one has picked up on it, and no one is telling you about it, and no one is reporting it. The media is so utterly corrupt, lost, useless. Useless. FT, Wall Street Journal, useless in a crisis, because they can only see the tip of their nose just. Okay? The AI bubble is steeper than the dot-com bubble. We know that. I think we saw it the other day. I gave you a presentation. Case-Shiller. Now, Case-Shiller is the best housing index that you can look at in the US. Okay, Robert Shiller and I can't remember the man case. But they put it together and it is off the scale. Off the scale. Okay? Dow Transports versus leading indicators. And again, this is transport is the key. Like FedEx, like UPS, once the transports start failing, you know the economy is failing because they're not moving so many goods. It's not rocket science, is it? It's just common sense. So that's a really big leading indicator, and it has the biggest divergence in history. When you see things time and time again that are the biggest in history, guess what? Something bigger than anything in history is about to happen. That's how it works. That's how it works. Margin debt is at an all-time high, even inflation adjusted, over 1 trillion. And how many times have I told you this? There's a trillion of margin debt in the stock market. It is an absolute disaster, just like crypto was last Friday. That market could fall 20% in a day, like it did in 87. Okay, it could fall 20% in a day, like it did in 29. And when it does, 1 trillion gone. And what do people do then when that's gone? They cry. Fascinating point, re the leading indicators predicting a lab leak in Wuhan. Yes, yes, there are no coincidences. Okay. At the end of 2019, there was a colossal repo stress. All right. And I'm telling you, I looked this up because I knew it happened. The repo rate spiked from 2 to 10%, and the Fed had to absolutely pump in trillions to keep the market alive at the end of 19. Okay? And what do the leading indicators indicate? They indicate a pandemic's coming. Join the dots. It's so simple. Join the dots. Okay? Now, that's it. That's Mike's piece as far as I got. I'm going to link it. And what I am going to say to you is I was approached yesterday by one of my clients who's been someone I've known for many, many years. And he said, Mike, we need to formalise this now. He said, because this is getting very serious, isn't it? And I said, well, you've had my reports for years. Yeah, it is very serious. And so we came to an agreement. And that's unfortunately the only way it can be done, because you can't do it over open airwaves, you just can't do it. And you have to be very careful. And I don't give advice. I cannot give advice, and I will not give advice. I can tell you what's happening in the market. And I can hopefully point you to join the dots. But I can't give advice. I don't give advice. Okay. But what I will say is, if you look at those numbers as I started this presentation, if you look at Agnico up 43% in 3 months, and Pan American up 42%, and even gold up 22.8% in a quarter, so that's almost 100% annualized. Okay, think about it. We are in a unique time, a totally unique time. You have to take unique actions in a unique time. You cannot just go with the flow. It's not going to work. You've seen that already in how the markets have moved, okay? And we're getting to the point where if crypto can do that on a Friday night, the stock market can do it on a Wednesday, the gold market could do it on a Friday. Anything can happen now. We're in a completely uncontrollable world. All right, thank you very much.